Thanks, Mangalam, for that. So that's the entire F&O space. But let's talk about one particular company. Aarti Drugs is the first management on the show. It reported what was a decent set of Q1 numbers. Margins came in healthy. Export revenue also jumped 18% year on year. We have with us Adhish Patil, who's the CFO of Aarti Drugs, joining in to discuss the company numbers gone by. Adhish, hi, welcome to the show. Just wanted to start by talking about the API business in particular. You said that last quarter you did see good global demand. Did that come in this quarter as well? Did you see good global demand this quarter? And could you break up the volume as well as the price action that you saw?
Yeah. So the demand was fairly good as far as exports was concerned, but on year-on-year basis. We did saw around 15 to 17% volume growth in exports and around 5% volume growth in domestic market year on year. But having said that, if we compare quarter on quarter, I think there is a lot more potential in demand for the volumes, both in exports as well as domestic market. And the main laggards were mainly antibiotic category in the fluoroquinolones.
Why did you see this kind of sluggishness in terms of the antibiotic API demand sequentially? And what are you anticipating in the coming quarters in terms of volume growth in the API segment?
So I think we can do much better as far as exports is concerned. Definitely, the China has been very active in last couple of quarters in terms of reducing prices, but mainly it is in temporary nature because on the longer term, definitely the demand does come back is what we have seen to us. We might have lost few orders because we were checking on the prices. We were not being too loose on cutting down the prices in last couple of quarters. But going forward, we are quite hopeful because we have got a lot of EU registrations and latest we got US FDA approval as well. So that put us in a very comfortable position to market more and more API in the regulated markets, which were not accessible to us some time back.
So if you could give us three numbers, Adhish. One, earlier you were targeting 14 to 15% margins in FY26. Does that number hold? Volume growth between 10 to 15%, I suppose you will have a better clarity on which end of whether 10 or 15 is what you're likely to do in FY26. And prices, you expected a deceleration of 2 to 3%. Will that hold? So prices, volume and margins.
Yeah. So as far as prices were concerned, as we estimated that in the first half, we might see around 4 to 5% negative price variation. So that is what we observed in the first quarter. We did have a 9% volume growth year on year for the first quarter. Definitely the greenfield projects did not contribute in these volumes, and they will to a significant extent in the H2. So the volumes will go up to 15%, especially in second half. First half might be in the same range of around 9 to 10%. So volumes, you can say on a composite level might be somewhere between 10 to 15 this year, and 15% definitely we are eyeing for the next year. And now the price erosion has stopped. Since December, March and June quarters, the prices of APIs were quite stable.
Okay, prices of API were quite stable. And margins, what's your word coming in on margins? 13% to 14% you had spoken about previously. So is that achievable and you still hold on to the target? Or maybe you could expect better margins going forward in FY26? And also just a word in terms of your overall revenue growth. You had said FY26 you would see the double-digit revenue growth. Does that still hold?
Double digit, we might reach closer to that by the end of the year. That is what we are hoping. Means probably 15% for the entire year. Value-wise growth may not be possible, but we will try to achieve 10% at least. Then as far as the next question was regarding what? Margins?
EBITDA margins, that 13 to 14% I think you had spoken about previously. So would that still hold?
Yeah. So the good part is our gross contribution has improved even on sequential basis. So if we have better utilization of plant capacities at that gross margin, definitely 15% we would have got in this quarter itself. But so 15 to 16% EBITDA margins with better utilization of greenfield capacities and the similar kind of maintaining the similar gross margins, I think it's pretty much achievable.
Okay. Adhish, you also had your Tarapur plant which came back on stream. Your import alert was lifted in the month of Feb. So have you restarted your supplies to the US? If so, in what capacity And what are you expecting in terms of contribution now from the US market?
So no, we haven't restarted the commercial business yet, though that plant was being used for some other geographies. But we already had a lot of customer audits for the US market for a couple of our products. So the thing is, once those all those approvals goes through, probably within after 12 months time, our US supplies might start. But before that, the European supplies will start from the same plant for the same clients, because those clients are exporting to Europe as well as to US market. So
But why is it taking you so long to restart your supplies to the US?
yeah. So because the thing is, so we were under import alert for quite a long time, around 10 years. So more than saying restarting the supplies, it would be more like launching fresh supplies to the US market, and that typically requires time from the US regulators, because the formulators need to get the new API vendor approved from the US regulator. So that process might take time.
Specialty chemicals, you expected that to contribute about 15% of your sales. Where does that number stand at right now?
Yeah.
And what is your glide path there?
Yeah, so 15% is pretty much achievable, because the salicylic acid plant that does fall under intermediate category, and then the Saika plant, which where we have just started the trials. Means I would like to say that last week only we started the trials. So if that goes through, then that plant would be put to use in this Q2 itself. If not, then probably in Q3. And so both those put together, definitely 15% is easily achievable in spec chem and intermediate category.
Okay. You had mentioned that Pakistan is around 3% of sales. There could be a little diversification in terms of sales. Are you still supplying?
No, we are not allowed to supply to Pakistan. So definitely that might have also hurt our export sale, which is down on sequential basis.
Okay, so where have you diversified your sales or diverted your sales to now, and how much is the export business as a percentage of your total sales, and how much did it grow, and how much do you think it was possibly impacted because of various external factors?
If you look at year on year, it has definitely grown by 15-16%. But as far as Q and Q is concerned, we have definitely lost volumes as far as exports is concerned. Even with that, we are having around 35-36% of our revenues coming from exports for the standalone business, whereas for the formulation, around 57% of the business is coming from the export market. So temporarily, it might get, we might get hurt in terms of exports because of the Pakistan issue. But probably in 1 or 2 quarters, that demand should come back to us.
Okay. Adhish, thank you so much for joining in with us on the show, and giving us an insight in terms of what we should be expecting from the company in FY26. That was the management of Aarti Drugs talking about maintaining and managing to at least reach a double-digit revenue growth in FY26 will be interesting, and in terms of improvement, in terms of pricing going forward, will be a key to watch out for.
Right, that's about Aarti Drugs. But, as just that happened, we had a flash coming in on the bottom of your screen for Bajaj Consumer. The intraday of Bajaj